right, let's see if this thing is working. It says syncing, so I'm not quite sure. Welcome to another Monday evening live stream. My name is Cameron, and we're here to talk about microcap stocks, except it's not Monday evening, it's Sunday evening. So what is going on? Well, I got a few personal commitments, and I just can't make it for Monday. So I thought I would talk about microcap stocks on Sunday. Hope you don't mind. There's a few to talk about, hopefully anyway. Like, we can get into this a little bit and just go from there, because it should be boring. There shouldn't be a lot to talk about today. I mean, at the end of the day, right now, middle of July, should be boring summer investing. Absolutely nothing we should be talking about right now. But considering that we've been in a bull market, it seems like there is more to talk about these days. So why not? I'm going to talk about investing in a bull market versus investing in a bear market. I'm going to talk about 3 or 4 different stocks that put out some press releases or financings this week that, just some stocks that I want to talk about. I'm going to have to market myself a little bit, unfortunately. You'll see why in a minute. And in the meantime, if you just want to sit in the comments, let me know what stocks you want to talk about later on. I will get to those down the road after I'm through my little presentation here talking about the stocks that I want to talk about. So I'll ramble on about microcap stocks for a little while, and then I'll do some Q&A at the end. So do not hesitate to put any kind of questions or stocks or anything in the comments. I will absolutely get to them. And this is kind of what I'm talking about here, why it should be a boring time for microcap stocks. Right now it's Sunday, July 20th. We're going into this week here. There's absolutely nothing. Basically, earnings start July 29th is when kind of earnings season starts for microcap stocks, and then it should go for a while. Basically, I've got it circled here in the box. Starting July 28th, 29th, and 30th is when earnings start rolling in, and 31st, I guess, in July for microcaps, and probably will last all the way till at least August 22nd. So, it's going to get busy. It is going to get busy later here in July. And right now it's kind of a break. Go on vacation, take a breather, do something fun. This is the week to kind of hopefully not have to worry too much about portfolios or investing at all, right? It's a good week to take off and take a vacation. Now, I do have to market myself a little bit, and mostly because I don't want people confused. Recently, I did kind of up the ante on my Substack. For people who don't know, basically I have a Patreon Discord. This has kind of been my main service where people pay to join my Patreon Discord. Discord is a fun place to chat. We have daily conversation, daily research, real-time reactions and opinions, and then early access to videos and member-only live streams, right? So I have been doing this Patreon Discord now for over a year. I still think it's my best offer. It's the best, most engaging discussions and daily chats on microcap stocks. However, I realize there are some disadvantages with the Patreon Discord, right? It's hard to set up. Basically, you got to get on Patreon and, pay for Common Sense Investing through there. It sends you a link to get into the Discord. There's scams in Discord. You have to make sure your settings are set up properly to protect yourself against scammers. And then a lot of people find it's too busy or noisy because it is set up for basically like a chat room. Like, I started the Patreon Discord because not necessarily I want like a stock picking service, because I'm not a financial advisor. This isn't financial advice. But I just got tired of looking at like all the anonymous comments boards that I absolutely hated. And I'm not going to name names, but a couple of them here on the screen. So basically I set up my own kind of comment chat board. And we got, I think, about 250 microcap investors in there now talking about microcap stocks. However, again, because the Patreon Discord for some people is a little bit too much, it's too noisy, it's hard to set up, I did increase my Substack kind of promotion or subscription service here where I added some content. And basically, if you join the Substack now, you're getting most of the same things that I offer in my Patreon Discord. You get basically early access to my weekly stock introduction videos. You get to attend all my members only live streams. I just had one of those Friday. I do those weekly, as well as sometimes a little bit more on earnings season, where I will just fire up some pretty unofficial, fun members only live streams talking about earnings and other stocks. And just in case I needed more work, I also have a bit of a chat. So basically, Patreon, Discord, Substack, 2 different offers, and that's kind of what I've been doing with Common Sense Investing. I absolutely have to touch on that. So thank you for bearing with me as I discuss that. And then, of course, you know, in my Substack and in my Patreon Discord, I've got an early release video already. This is a video that's going to be released to the public this Thursday, July, I don't know what that'd be, 24th or so, I guess I'm going to release this video. And that's already available. It's been available for 3 or 4 days now in my Patreon and on my Substack. So that's kind of one of the bonuses. In the meantime, had pretty good luck lately. It's easy to have good luck when you're in a bull market, right? Introducing one stock in 10 minutes or less. My latest introduction was Intermap Technologies, the mapping microcap stock. Absolutely love this company, love their product, love what they're doing. Right now, just basically as I released that video, as I was recording it, they had a price upgrade from an analyst from Stifel. It was basically sitting at about $2.20 Canadian share price, and they listed it as a $5 price target. One of the things that was not included in that video is right now we are waiting, as people told me after my video, for the rest of the bid status. So in my video, I said that they basically have 10% of that mapping project for Indonesia. They are currently offering their bids or collecting bids for the rest of the project. So the request for bid status has been announced. Right now they're doing pre-qualification and bidding underway. This is expected to be announced, like the conclusion, the winner of these bids are expected to be announced September or October. And of course, these are multi-year contracts. This is large money, and the primary partner is likely Intermap. Share price will suffer if it's not, because we basically, share price has the rest of this contract baked in, as basically Intermap wins this large contract and continues to grow. So absolutely fantastic to see with this video for Intermap. One of the things that some people want to talk about, Snip Interactive. Can we touch on the macro environment? Would you consider trimming within the micro-cap segment of your portfolio if you wanted to reduce risk? I'll actually talk about that. One of the fascinating things with micro-cap stocks is that, you know, even myself, I'm out here sometimes and I'm doing research trying to find the next best micro-cap stock. And sometimes the best microcap stock is the one that's already in your hand, in your portfolio, that you've already researched. It is absolutely amazing how many times a stock will go up, will make shareholders money, something happens like Donald Trump or some other issue, trade issue, tariff issue, recession issue, war issue, whatever it is. Intermap here went on an absolutely blitzkrieg run here up to about $2.80 Canadian share price, crashed down to about $1.60 Canadian here back in April of 2025, and now they're up to $3.15. So it's amazing in how much money investors can make just by, you know, basically playing one stock. Maybe playing is the wrong word, but investing in one stock, whether you're a buy and hold investor and you're buying these dips and you've made a significant amount of money holding up to this point, or whether you're a bit more of a trader and you're kind of, you know, buying this excitement, maybe trimming some or selling here and then buying at the bottoms. I mean, basically, you look at a stock like Intermap, and it has given shareholders, you know, a lot of ways to make money on it so far this year. And that's absolutely fantastic to see. I love it when both traders and long-term investors can make money on a stock. That is what I want to see. Now, it's interesting here, another quote from Ian Castle basically saying the same thing I just pointed out. Some of the best new ideas are old ideas that you used to own. You already know where the skeletons are buried and what needs to change to make it investable again, and you can react quicker than others when you see those changes. This is the chart, just for one example, of NTG Clarity Networks. This is zoomed out to basically the past 2 years on NTG Clarity Networks. You notice a trend? I mean, this company is absolutely amazing in that just the stock goes up, the stock goes down, the stock goes up, the stock goes down, the stock goes up, the stock goes down. And whether you're a buy and hold investor that's buying there and holding until today, you've made money, or if you're, willing to trim or sell or try to time it a little bit, selling at some of these peaks and then buying at some of these troughs, I mean, there's another opportunity to make money. So NTG Clarity Networks, another one in the past year or two that is just making shareholders money, whether you're a long-term investor or whether you're a trader. And I think that's absolutely fantastic. Yes, I got a little lucky on that one. I wish I had put my video out probably a week before that analyst announcement with the $5 price target. I'd planned that video a little earlier. I procrastinated, and unfortunately, it had to come out pretty quick. Now, before I go look at some other stocks here, I just want to remind you, not your financial advisor. I'm not a financial advisor. This is not financial advice. I just want to communicate my thoughts and my opinions on some of these microcap stocks. It is absolutely not a solicitation to buy, sell, or hold any of these stocks, because I mean it. I say this all the time. I don't know anything about you, your experience levels, how much capital you're working with, your risk tolerance, your timelines. I know nothing about that, right? So this is just educational communication. Hopefully we all learn from it, and it's just good to talk about it. So that's kind of why I'm here. Another reason why I'm here is to, catch these bull markets. I mean, wow, absolutely insane. What kind of market we've been in for the past, I don't know, month and a half or 2 months. Recently, it has been fantastic. I did just put a post out on X recently that is, kind of making people think. That's what I try to do with common sense investing, is that, I don't think any investing strategy is really black and white. And I say this all the time. No company is ever black and white. It's never that easy. If investing was that easy, if it was just as easy as finding a good company, profitable, growing company that never has any problems and only goes up and to the right, and as an investor was just as easy and black and white as to buy when it's cheap and sell after it goes up after a decade in your portfolio and you retire and this microcap stock has made you $1 million. If it was only that easy, but it never is. So I like to try to get people to think, right? Building different strategies that work for you and not necessarily to copy me. I just want you to get you thinking about what works for you. And I talked about it today that if a virus wiped your broker account, sold all your stocks over the weekend, would you rebuy the exact same ones Monday morning, same size and all? This question is to get you thinking about strategy. The thought process is, if you wouldn't buy the exact same portfolio Monday morning, then the question becomes, why aren't we building the best portfolio every day? Usually we have some bias holding us back, right? Stock has gone down. We don't want to sell a loser, so we keep it in our portfolio, hoping it's going to go up. Stock has gone up. We don't want to admit that it's massively overvalued. We don't want to trim that stock. We just hope it's going to keep going up, even though we know it's, massively overpriced. A lot of hope, and that hope is not necessarily an investing strategy. So I like to try to get people at least thinking. And again, the thought process is in a bull market, if you wouldn't buy the stock back at the same price and the same size, it's probably overvalued. I always have people ask me, well, Cameron, is it overvalued? Is it undervalued? I mean, sometimes I just think you just need to ask this question. If you have a stock that went up, whether that's an NTG or a Kraken or an Intermap or whatever winning stock you have in your portfolio, if for some reason your broker accidentally sold all your stocks, would you go back and buy it at the same price, the same size in your portfolio position, right? If you wouldn't, then it's probably overvalued, right? Just trust your gut instinct on that. And then, in a bear market, if you wouldn't buy it back at the same price and size, it's probably a loser, right? If you have a stock in your portfolio and your broker sold it over the weekend and it's Monday morning and you got 100% cash in your account and you have to go rebuy all those same stocks and you wouldn't buy that same stock back, I mean, I wonder right now if, you take a look at your portfolio, whether or not that stock wouldn't be considered a loser right now, and why is it in your portfolio if you wouldn't buy it back on Monday? So really just trying to get people thinking about, the stocks in your portfolio, what you would do in different market conditions, because it always amazes me that if I just wiped out your account and you started with 100% cash and you would build a portfolio different than what you currently own, my question is why, right? And another question or comment or strategy that I wanted to put out there, I talk about this all the time. I made a video in my members only live stream here this past week where I talk about this a lot more than I can here in the public. But I basically, during a bull market, I increase my stocks, the number of stocks in my portfolio from 12 stocks to 25 stocks, right? As well as I start paying attention to technical analysis nearly as much as fundamentals. And why I do that in bull markets is I tend to de-risk through diversification. So I'll talk about that a little bit because I know that was one of the questions here in the comments. Now, the first challenge that I usually get is, isn't diversification a little bit of diversification? Wouldn't it be better to just stick to what I think are the 12 best stocks? Yeah, maybe sometimes, right? I mean, typically they're not bad companies. It's not like I'm adding these additional stocks to my portfolio that I think are shit and I'm just adding them for diversification. They just didn't quite make the top list of stocks, and that's okay. I'm not right 100% of the time. So when I go from 12 stocks to 25 stocks, it's not like I'm adding shit. It's just I'm adding other good companies to try to give my portfolio a little bit of diversification. Now, why do I do that? Well, in a bear market, it wasn't that long ago, February, March, April of 2025, with the markets going down, Donald Trump threatening tariffs and trade issues and trade wars and everything else, cash is king. And I talk to people, what about, why are you not protecting your capital a little bit more? Why are you okay with losing money and watching stocks go down all the time, right? There are ways to look at our portfolio and try to de-risk. And that's typically why I end up with less positions. I might end up with just 12 of my favorite stocks because they're 12 of my favorite companies that I maybe trust a little bit more, that I've been with a little bit longer, that have spoken to management a little bit more often, right? But basically, I want to protect my capital in a bear market. The problem is when we get into a bull market, like the one that we've seen, if you're just sitting there holding money, you're not making any money, right? Stocks are going up. You're not capturing this. This is Kraken Robotics in the past 6 weeks, 5 to 6 weeks, right? If you were just trimming and holding cash, you missed out on, and this is just one example, there are lots of companies, lots of stocks in the past 6 weeks in the past bull market that have gone up parabolically, right? So holding cash in a bull market is actually a higher risk. So what I tend to do is, I own maybe a couple stocks. This is just for an example. You could see in the past, 4 or 5 weeks, Kraken Robotics is up 16%, NTG Clarity Networks is up 16%. Basically, in this past bull market, I would have only broken even if I just bought and held those two stocks versus, and I'm not going to say what I did buy, but basically, if you're able to trim some of these stocks and diversify, which is what I did, I took my profits from 2 of these larger positions because I had 12 positions in my portfolio. I diversified into a few other stocks, and I went from owning 2 stocks to basically owning 5 stocks. One of those stocks is up 80%, one's up 10%, one's up 25%. So I went from a position of not making any money in this most recent bull market to adding some diversification into my portfolio. And now I have options. Now I have choices. If a bear market hits, I've got 5 different stocks, 5 different position sizes. I can make the choice to sell any of those that I want for cash. And then in a bear market, I get to de-risk again by moving to cash. So that's typically what I do. And again, I talked about this for about an hour and 15 minutes in the Patreon Discord and on the Substack, right? Now, is that diversification? Not necessarily, right? Finding good microcap stocks is hard. In a bear market, if something bad happens, rarely does everything go down at once. So owning a little bit more diversity in your portfolio is a hedge against a bad market. Of course, if we get World War III, everything's just going to crater at once, right? But typically we don't get that. We get certain countries getting tariffed, Trump not liking certain countries, whatever it is. Certain industries have issues. Certain stocks have issues, and you could see year to date some of these numbers. It's definitely not consistent. So, adding a little bit of diversity to my portfolio is definitely something that I like to do in bull markets because I'm still investing in good companies. I'm still capturing this surprise upside in some of these good companies. It's just when I have the little bit of extra diversity in my portfolio, it de-risks a little bit. Which Microcap am I bullish on currently? Okay, I'll think about that as I go through my presentation. Thoughts on Name Silo. My thoughts on Name Silo is they might be my next video. It's finally time I made a video on Name Silo and, gave them a little bit of love because they're up in share price from 30 cents to like $1.15. Name Silo's been a huge winner, right? So probably time for a video here on Common Sense Investing. A couple stocks I wanted to talk about before I close this down here and we get to the Q&A. California Nanotechnologies. This is one of those companies, one of those stocks, right? Watching valuation, not being stubborn, being comfortable with taking some profits to reduce your risk and maybe, taking those profits and diversifying into some other companies. Because if you did that, if you took profits here on California Nanotechnologies at $1.95 Canadian and you owned, 2 or 3 different stocks here instead of just Cal Nano, you would have avoided this. California Nanotechnologies is down 45% on the year. California Nanotechnologies is down basically 72.3% from their high. So valuation matters. One of the things that people ignore is that higher share price does equal higher risk, and you really have to think about your own strategy and what's working for you. If you've held California Nanotechnologies this entire time, looking at your strategy of buy and hold forever versus willing to be a little bit more flexible with California Nanotechnologies. Now, one of the reasons they've been struggling is, a lot of stock market investing in microcaps and picocaps is all about narrative. And lately, the narrative has turned a little bit sour on green steel. And because of that, because a green steel company is California Nanotechnologies, one of their largest clients, or it is their largest client, people have been very worried about them. That is why share price has been going down. However, I must admit, they're starting to become a little bit more attractive to me, right? Lower highs, higher lows, starting to get this little bit of compression here. I wonder what happens next with California Nanotechnologies. The real question here for them is whether or not they can get over maybe a reduction or a loss in their green steel client and get enough diversification to continue their growth and have a good year in 2026. But I have to say the setup is looking a lot better. And right now it's only at about a 17.4 million US market cap. And there's their revenue, there's their adjusted EBITDA and their operating cash in 2025 full year earnings. So this isn't a forward projection. This is their last year's earnings, where they're now at their current market price 2.8 times sales and 6 times operating cash. So if they can get future growth, that is looking a lot more attractive for California Nanotechnologies. It's starting to show up on my watch list. The other one here is NTG Clarity Networks. And again, come back to what you know, right? They just closed another life offering. This was for $9 million. They've closed it very quickly in 10 days. 4 million units of share dilution, $2.20 per unit. You know, if we go back here, they're already back up to $2.24 Canadian. And again, bringing up this chart, it has been so predictable. So, I mean, there's no guarantee that they will do this again, but you could definitely see this trend showing up for shareholders of NTG Clarity Networks, where they're basically like, yeah, share price is down again. You know, guess what I'm doing? When you pull back a little bit, when you zoom out, this is 2023 right here, starting for NTG Clarity Networks. And you see that pronounced, you know, 2 steps forward, 1 step back share price. I wonder, you know, you have to wonder if the next step isn't another couple steps forward for this company. I hope for the company's sake and for their shareholders that it is, but very interesting company to look at right now. High Tide as well. I have to give a shout out here to High Tide. I'm not very happy with them, right? You know, they were just about $5. People really like this company. Canadian retailer of cannabis, basically has some of the nicest legal cannabis stores in Canada. All they had to do was continue doing that, and they keep getting distracted. They did close a very nice $30 million junior secured loan, only at 4%. That's super cheap, and convertible at $4.20 per common share. So those are pretty good terms. And that's coming from Kronos Group, which is a $1 billion microcap, small cap company, a global, I can never say this, cannabinoid company. I did it. Thank you very, very much. And so basically Kronos Group here is lending High Tide some money, convertible at $4.20 Canadian, and they're up a little bit. You know, they're definitely up from April. I mean, that was quite the dip down here. They're up a little bit on the news of this convertible or this secured loan, but I mean, you know, does it ever go back up to $4.20 so they can convert? I would hope so. I hope for the sake of shareholders of High Tide. Basically, this is the first right thing I think this company has done in a while. So it's good to see, and I thought I should reward them with at least, you know, 60 seconds on my live stream for doing something smart finally, right? Now, one of the things I'll talk about here is that with stocks going up significantly in 2025 and a bull market, you know, I think my focus now really turns into the next up stocks, the stocks for 2026, right? Because we're always looking for now, we're always looking for today, especially in a bull market. But for me personally, I think if I'm finding any value out there right now, and I'm still looking for value, it seems to be on companies, on stocks that are set up for 2026 or 2027. So I like this slide because so many people right now, especially in a bull market, tend to talk about price. One of the things that I'll warn is that, at least in my opinion, investing based on price isn't a good plan. It'll get you to sell too early or sell too quickly or hold too long or buy too soon. I don't personally think necessarily that investing in price is a good idea. If you're going to do that, basically what I do is I put a time target on everything, right? So I am going to look at this company in 2 weeks or 2 months or 2 years. It really reduces my stress if I'm not only looking at a price target, but a time target. How long am I willing to hold this stock before I make a different decision? Now, one of those stocks right now that I have to highlight is Glow Life Tech Core. Because as you could see, Glow was up to 8, 9, almost 10 cents, 8 cents, and now they're back down to 5 cents Canadian, even down to about 4.5 cents they've been trading for occasionally. They're still doing okay, up 66% in the year. However, they've had fantastic news recently, just 27 days ago, right, expanding to all these stores in Ontario. This is a very small Microcap company, and share price has not been going up. Here they commissioned their new automated bottling line, supporting a large scale up, launched a new brand, and with the scale up, they should also get increased margins because they can basically produce more by working less. So all this good news, and yet share price is down. At least in my opinion, what my thoughts on that is the reason is this company is set up as a 2026 company, right? Right now they're doing well, but I mean their revenue is basically only at about $1 million right now, or about a $4 million run rate. So in a bull market, a lot of microcap investors are basically saying, what have you done for me lately? What can I make money on now? I mean, when there's stocks just absolutely going parabolic up, it's definitely worthwhile for a lot of investors to trim or sell these kind of stocks that have underperformed, move that money into a stock that is going up right now today, and then maybe or maybe not with a plan of coming back into a stock that they like longer term later. So I think that's a little bit of what's happening with Glow Life Tech Core, is that nobody's excited about buying a stock that might be a 2026 or 2027 play when there's stocks that are going up right now in 2025. But I do want to say I'm very happy with their news. They've been putting out very good news. I am a shareholder on this one, and I like it. I'm pretty happy at what they're doing. The company is improving. The share price is not. It's definitely not. This is one of those stocks that's been going up exponentially, right? Absolutely. Congratulations to Canara Biotech, Love V. This is a cannabis stock, very successful. Very happy to see that. Especially huge win for Matthew Martin at Rivmont. This is basically one of his favorite cannabis stocks, and my gosh, it's just really done wonderfully in the past year for a cannabis stock. Cannabis getting some love again, up 163%. I wonder if someday it won't be High Tide's turn. Maybe not. They're not. I'm not super happy with High Tide right now, but maybe it'll be Glow's turn. And then finally, Gatekeeper Systems to kind of close out this live stream and get to the Q of A. I know a lot of people, this was announced, $10 million bought deal private placement was announced right on my live stream last week. I haven't seen that it's closed yet. I've heard that it's close, $1.20 per share. Gatekeeper Systems is raising $10 million. I know one of the things that I was confused about, and I say this all the time with microcap stocks, is that you don't always have to be right. Just try to have a plan, because I thought once the financing was announced, I thought share price would drop below that $1.20 Canadian financing line right here at $1.20, and it has not. I am surprised. Share price is still held up for Gatekeeper Systems. That is absolutely fantastic, and now I can finally shut up about Gatekeeper Systems doing a financing. Absolutely fantastic work for them. And I mean, shareholders, congratulations. That's just such a huge winner. So that is the end of my little presentation. There's probably 20 comments for me to get to, so I am going to go check those out and see what stocks you want to talk about today. All right. Let's see here. Questions and answers. Thanks for joining me on 67 people here on a Sunday evening. That's fantastic. I did not think that I would get that many people on a Sunday evening when my live streams are normally on a Monday evening. So really appreciate that you're here today with me. And let's see if there's questions. Let's talk about hash fees. So that's simply solventless concentrates. You know, we have to be super happy with hash fee. I'm a shareholder of Simply Solventless Concentrates, and one of the things that I typically do myself, again, not financial advice, it's just what I do, but typically when I get a stock that crashes the way Simply Solventless did right here, I do nothing for about a week. You know, I try not to let emotions just rule me. Right here, everybody said the company is a scam. The CEO is the worst CEO ever. You know, it's time to sell. It's never going to go anywhere. They're going bankrupt. I mean, every negative thing you could possibly hear about a company was heard whenever, and rightfully so. I mean, if you're a shareholder and you lose 70% of your money here, your you know, on paper gains at this point just gone in one day, you have a right to be upset. But I'm not sure if investing and making investment decisions when you're upset is really the best idea. So, I mean, I did wait for a little while, and I really appreciate that Small Cap Discoveries did an interview with Hash, and released it so quickly to the public. It gave us some information, and this company is building back trust. And the amazing thing here with Simply Solventless, 52-week range, 15 cents Canadian, that wasn't last year. That was right here. Somebody bought shares of Simply Solventless for 15 cents Canadian. It is now up to 34 cents Canadian. So somebody has made over 100% in buying shares of hash in the past couple months. It's amazing to me in microcap stocks that happiness around a company or a stock is all relative, right? Somebody just doubled their money in hash while other shareholders are quite upset because they may have bought right here, right before the crash. So basically the company is rebuilding trust. That is fantastic to see. You know, investors are seeing them make good decisions. They put out good press releases talking about what they're doing, and people like that. They're rebuilding trust. Is it, you know, comparable to Love right now, Love V, Canara Biotech? No, it's not quite as solid as a company there yet. They still have a long ways to go before they build up to that. But I mean, at least you know, they're recovering, and people are now making money. You're losing less if you're long-term shareholders, and people, you know, recently have been making money on it. Enterprise Group. I love Enterprise Group. I think if you're a large shareholder right now, I hope you've been on the phones talking to how active drilling activities have been in Western Canada, because I'm getting conflicting reports. One of the problems with Enterprise Group is this is a company that basically sells, you know, picks and shovels to oil and gas operators. Not picks and shovels, but you get the, you know, the metaphor, right? They're selling lighting and heating and energy solutions to oil and gas drilling companies. And so when there isn't a lot of oil and gas activity, Enterprise Group does not do well. Remember last year, Enterprise Group absolutely sucked in the summer because most of the oil and gas companies in Western Canada shut down for the summer because they didn't want to contend with forest fires. This year, LNG Canada has come online. There's been a lot of drilling up in northern BC, which is, you know, right in Enterprise Group's sweet spot. So maybe this summer is better earnings for Enterprise Group than it was last summer. Just right now, I don't know. I think people are a little bit disappointed because Enterprise Group was on BNM Bloomberg about 6 months ago. Share price went absolutely up to the moon. It was up to like $2.50. Now it's down to $1.60. So anybody who bought on the BNM Bloomberg video is now down significantly. I still think it's a great company. It's just, you know, you basically expect some of these microcap stocks to swim upstream. It's a hard thing to do, you know, for Enterprise Group to really put out fantastic earnings in the summer, you know, with all these trade and tariff issues, the price of oil down. Yeah, Enterprise Group is a company for me that's, you know, one of those 2026 stocks like I just talked about with Glow. Could I touch on the macro environment? What sectors would you consider trimming first within the microcap segment of your portfolio if you wanted to reduce risk? I don't trim by sectors. I typically look at each company. I look at each stock, right? I've got this slide. I'll bring it up here. Is the basically for me, and again, not financial advice, it's just what I do is I make companies earn my money is what I do. And not necessarily sector by sector, but when I buy a stock, when I invest in a company, I usually just buy a very small opening position, but I build it with a thesis. I buy with a thesis. What's the plan? What's the strategy? And then over time, I look at the inputs that are coming in, earnings, news releases, macroeconomic conditions, trade issues, tariff issues, industry sector issues, whatever it is, and then I reevaluate my thesis, and then I buy, trim, or sell based on each individual stock, whether my thesis is stronger than it was before, neutral to where it was before, or weaker than where it was before. I make that decision with each individual stock. And that's why, like, I have 12 to 25 stocks in my portfolio because that's all I can manage time-wise to be able to do this, to be able to, monitor all those companies. Every time there's a major input coming in, I got to go look at each stock and make that decision. But that's why I argue with people so often because, people will say, oh, I'm buying the stock. I'm a buy and hold investor. I'm going to hold it forever. That's not me. I want to buy and hold a stock forever, but if something changes, if one of those inputs change, if the company disappoints me, if the industry sector all of a sudden is going to suck for a decade and I know it, I'm not going to be that stubborn and just be like, oh, I'm a buy and hold investor. I'm going to hold forever, right? You have to evaluate the thesis. You have to be, able to change, able to adapt and change. And that's what I do. So there's no, long story short, there's no one sector that I'm looking at trimming right now. Snip Interactive, it's sitting at 7 cents Canadian. This week it was trading down. People were buying it at 6.5 cents Canadian. Same problem, right? Snip Interactive is another one of those, if they do well in the back half of 2025, I don't think anybody's going to care because they are always late with their audited full year earnings. That pisses people off, right? So Snip Interactive for me is another stock, another company that people are waiting for 2026. They're waiting for this year's full year audited earnings, which won't be released until probably, when is it, February or March of 2026. And so because Snip Interactive is a bit of a 2026 stock, it's just not getting a lot of love right now because there's some other companies that are going up and microcap investors are putting their money in those types of companies. So share price has been weak. I think the company's improving. I think Snip Interactive is improving. I don't think the market is recognizing that because they pissed the market off with having late earnings, late audits. So it's their own fault and they need to improve on that. I say all the time, like, management, CEOs especially, wear 10 different hats. They do 10 different jobs, maybe more, but just as an example or a metaphor, right? But a CEO has a lot of different jobs, 10 jobs. They might only be good at 5 of those jobs. They might be really good at 1 or 2 of those jobs. The best CEOs, though, the 4, 5, 6 jobs that they're not great at, they delegate those jobs out. I don't feel like Snip has been delegating out communication with investors, their earnings, making sure their audits are done on time. Like who's looking after that? Who's looking after that, right? What's the framework for evaluating management transitions in small caps? If a company just turned profitable but leadership changes, is this a warning sign or just business as usual in the space? Good luck figuring that out. So that is one of the best reasons for tracking a company. And when I go back to that post, actually, I'll just do it right now because it'll probably answer your question. It's amazing how sometimes I just pull up these perfect posts just at the right time, especially from Ian Castle. Sorry, just give me a second. Where did it go? There it is. Found it. Ian says that oftentimes the best new ideas are old ideas you used to own. You already know where the skeletons are buried and what needs to change to make it investable again, and you can react quicker than others when you see those changes. So Ian just answered your question, in my opinion. Basically, if I know the company, I've been researching it for a while, it was an old idea, you will generally know, was management bad and that's why you got out of the stock? And the change in management might be something that's now good. That's a positive inflection point that you need to look for. And, you're going to get on that quicker than other people because you've been tracking that stock for a while. Or was the previous management good, constantly having issues, and they just gave up and quit, and this new management coming in sucks? Basically, you're only going to know that, or at least it's easier for you to know that and react quicker if you've been tracking the stock for a while. If you're completely new to the company, if you're just researching it now and there's a management change, you're guessing. I mean, until we start getting some CEO interviews, until you can email the company, speak to the company yourself, get that kind of networking in where you get to know who management is and what management's vision is, if the company is new to you, at least in my opinion, then it's almost impossible. You're just guessing. You're just hoping, right? Like, okay, there's a management change. Hopefully it's good, but I'm not researched enough on this company. So, as far as the framework, I think you'll know if you follow that stock long enough. Hey Cam, what Pico caps are you most bullish on currently? Not going to say that out loud because Pico caps are tiny companies under $10 million market cap companies. And I hate to say it, but if common sense, I can move share price of a Pico cap on my channel. If I say one stock is better than another as a Pico cap stock, share price could go up, and I never want to get accused of pumping a stock. I've put a few out on videos recently, but again, all my videos are just here's some information, you go make up your own mind. But I mean, as far as Pico cap stocks, I made a video on Total Telecom, I made a video on Hypercharge, I previously made a video on Avocor Health. Zone Properties is a Pico cap. Like, I've made videos on some Pico caps lately. Those are at least the Pico caps that I've looked at and thought, okay, these probably aren't garbage scams like a lot of Pico caps are, right? So I'd suggest going through my video list and then, trying to figure out what the best company is from there. Name Silo, I love Name Silo. I'm going to make a video on Name Silo because it's been doing very well, and I don't think the market, most microcap investors know what this company is. They just think it's a domain company. Name Silo is basically a Berkshire Hathaway for Paul Andreola. Well, it's one of the greatest microcap investors ever, and definitely the greatest microcap investor in Canada. And so Name Silo is a domain business that produces cash and is growing and profitable and producing more cash, and that cash goes into the hands of, they own only about 80% of Name Silo, I believe, but that cash goes into the hands of Paul Andreola, who has opportunities to fund other companies through financings or loans or buy outright other companies, which they did recently. So Name Silo is a very diverse and interesting company, and it deserves a video. I've talked about it a few times on this channel, but I've never made a direct video on Name Silo. But yes, I love Name Silo. Hey Cameron, did you ever get a chance to check out WSTL? I recommended a couple streams ago. I'm not sure if you found them interesting. That one does not ring a bell at all. WSTL. I'll just look at it right now. Westel Technologies. I don't remember even you requesting that at all. Westel Technologies does not come to mind. It's up 162% right now, year to date. Westel Technologies designs, manufactures, and distributes telecommunications. Sorry, I did not look at that. It does not even ring a bell in my head. So I will make a note to look up Westel because it's up. It looks like it's doing well, and it looks like the type of company I would invest in. So WSTL for people to check out. Have I ever covered Grid? I think there's someone in management involved from Well Health on their team. Really interesting tech, and I think they could be profitable soon. Yeah, so I got no interest in Grid. I actually did make a video on Grid back when they were. That's why it's always fun to watch Common Sense Investing videos, but I'll bring up Grid here for you. Grid is Tantalus Systems Holdings. So you could see their share price up 168%. I made a video on Grid. I think it was in 2023. Was it early 2024? It was somewhere in here. It was either down at $1 or it was like $1.50 or something like that is when I made a video on Grid. You could actually, it's not specifically on Grid. My video was called Smart Building System Stocks, where I focused on Grid, Legend Power Systems, and a couple other companies. Eddie's Smart Home Solutions. And damn it, I'm not going to forget the fourth stock. But I made a video covering 4 companies that were basically capitalizing on making homes smarter. And, Grid has performed absolutely stunning since that video. The problem is, and why I'm not that interested, 174 million market cap. And I just feel like it's basically gotten ahead of its skis a little bit. It's basically owned by institutional investors. So trailing 12-month revenue, 46 million. It's $172 million market cap. And institutional investors now own, insiders, it only says 19%. I think that's quite a bit higher from what I heard, institutional ownership in Grid. But I don't know. After share price went up, I just kind of lost interest in that one. I don't follow it a whole bunch, unfortunately. You can't win them all. What they do is they regulate the power supply. So that's why they're kind of a slow grower, because they have to basically, it's my understanding, win contracts or win partnerships with very large, slow changing energy providers, electrical energy providers. And, once they basically win that partnership, they slowly have to pilot it and make sure it works. And there's this multi-year process of basically winning a contract. But yeah, once they win those contracts and once they start growing, Tantalus Systems, obviously their earnings will improve significantly, or at least the plan, right? I don't know if you went over Hydrate yet. If not, what are your thoughts? I just made a video on them. My thoughts are, I think Hydrate, people forget that there's so much hype. There's so many people talking about Hydrate, and I was actually impressed that their financial fundamentals aren't as bad as I thought they would be. Normally, when you see these overhyped stocks that are just going to the moon in share price, a lot of them are story stocks, and they're not very good fundamentally. Hydrate somewhat impressed me. The problem with Hydrate is that people are expecting insane growth. I mean, I've heard people say, 100%, 200%. I've heard people say 1,000% year-over-year growth in Hydrate. I don't know what to believe there. So, I think some people have taken a spec position in Hydrate just because you don't want to miss out if they do get like 1,000% growth. But I mean, realistically, what they're going to do, I don't know. I expect the financing. Hydrate's going to need, more money from like VST. Their shares, VST owns about 50% of Hydrate. They'll have to do something there. So I like the company. I feel, unfortunately, like Hydrate is getting, just because it's so hyped up, people are talking about it so much that it's kind of got a bad rap. Let's see here. In Discord, you referenced Keystone mentioning an accredited investor with a broker. You'll get 5x the benefit of Keystone. They'll get the best financing. You won't. Please expand. Ask me in the Discord. That's something that I'm not going to talk about publicly. Yeah, High Tide has been a mess lately. Sad to see. Would like that for them to open a store in all the provinces too. That's what pissed me off, is that High Tide was supposed to be a slow and simple company. They're have the best legal retail stores in Canada for cannabis. Very beautiful stores, well lit, friendly staff. You go in there. I've been in many High Tide stores just to check it out when I was doing my research on them. And I liked it. Like it was the type of store my wife even said, I would come in here. And all they had to do was kind of grow in Canada, keep growing stores in Canada, and they just keep getting distracted. And that's what pisses me off, is they've taken what should be a simple company, a simple business model, more stores selling more cannabis in Canada, to I don't know what they've been doing. I hope they get back to focusing on Canada and getting some growth. Some companies I'm interested in hearing your current thoughts on: Vital Hub, FTG, and ZDoc or Zedcor. I'm assuming you're talking about. Look, for common sense investing, those are already successful companies, right? Those Ferran has been on my top. I think it's my top 5 or top 6 in my Discord. It's been there for a while. It worked its way up into the top 10 in my Discord at around $7. It went up to like $12 and something. I love the companies. I love it. But typically what I'm looking for is simple and small, right? I'm looking to find companies that are usually under $50 million market cap, and I want to follow them through that discovery process, right? Where they're discovered by larger investors and then smaller funds and smaller institutions and bigger institutions. Vital Hub, Ferran, and Zedcor are all already discovered, right? Their valuations are already here. So when you talk about like the different engines of how to make money in microcap stocks, sales growth, earnings growth, margin expansion. You're not going to get any more margin expansion, at least in my opinion, in some of these companies. So they're very successful. I like them a lot, but they're into almost like the small cap stock territory. They basically graduated from my platform. Wiser AI Systems. No, I've never heard of that one. Sorry. I found Charbone, green hydrogen. Yeah, it's no, I'm not going to cover that one. Charbone is Marius Kaniski was pumping that one for a while. Green hydrogen, don't they do some other thing? I'm not that interested in that type of stock, sorry. What companies are you most interested in upcoming Q2 earnings coming out? All of them, all of them. So what I'm looking at here with Q2 is has companies repaired the damage from Trump, right? What we saw in Q4 and Q1 has been Trump problems, trade problems. How many companies? BioRem, Mind Technology, TMG. I mean, I could go through a list and give you 20 different stocks if I fired up my Discord who have struggled in the past 3, 6, or 9 months because of either the US elections, Donald Trump getting elected, and or the trade and tariff issues afterwards. So what I'm looking for finally in Q2 is whether the US economy is starting to moderate again. Are contracts finally being, capitalized? Are contracts finally getting put into effect? Take a company like Symmetrix. Symmetrix has had like a $28 million backlog for the past 12 months. Doesn't matter what your backlog is if the contracts never start. They're a construction company and everybody put the contracts on hold because there's too much volatility. So Mind Technologies had a weak Q1 because they couldn't find ships. BioRem had a weak Q1 because they couldn't find ships. Like there's been trade issues because of all this tariff nonsense. So what I'm looking for in Q2 and then into Q3 is whether or not the U.S. economy especially, but the world economy in a way, whether it's kind of getting back to normal. That's what I'm looking for. So I'm most interested in companies like Mind Technologies and BioRem because not only do I like the companies, not only do I think they're quite undervalued, but they've also had some really weak earnings. And I think if the economies can kind of get back to normal, I'm looking for those types of companies like BioRem and Mind Technologies that can rebound, not through hard work and doing something different, but just the economy getting back to some kind of normalcy, right? So that's what I'm kind of interested on, right? What are the chances that Gatekeeper gets uplisted on an exchange time frame? Zero. Why would they? When your stock's going to the moon, share price is up, you're just getting discovered, you're getting institutional buying, you've got all these contracts on the go. I would think that Gatekeeper has other priorities. They need to bring in more contracts because their share price is quite high and their share price has priced in more large contracts. They need to go get those contracts. They need to go execute on those contracts. And they do not need to get distracted by anything else, especially any kind of uplisting. So 0% chance that Gatekeeper uplists in any way, shape, or form in my mind. I think TrueBar and Kraken Robotics are absolute best picks for 10x. Good luck. Wolf of Oakville absolutely loves his TrueBar, and I think he's got like a $4 or $5 price target, buyout target on it. So yeah, I'm wishing everybody in TrueBar luck. It's not my favorite company, mostly because I don't like vegan protein bars, right? So I'm a little bit biased, but I do understand the business model. And of course, I love Kraken Robotics, but Kraken Robotics is already at 12x right now for my channel because I introduced it around 28 cents to 30 cents. Any updates on Well Health? Haven't covered them in a long while now. I had to stop covering Well Health Technologies. I talked about this on a live stream probably 3-4 months ago. Well Health Technologies, I love the company. They're rolling up medical clinics in Canada. I feel like there's going to come a day in the next 10 years where you can't go to a medical clinic in Canada without running into Well Health Technologies and using their services. So I love the company long term. I love the stock, but the problem is that the advantage we have as small retail investors investing in microcap stocks is they're simple. They're hard to buy for institutions, and they're simple. Well Health Technologies isn't simple. I can go through the earnings of probably 5 to 10 different microcap stocks compared to just going through Well Health Technologies earnings. They're so complicated. They have so many different divisions. They have so different margins and different growth and different CEOs even for their different divisions. It takes me days to go through Well Health's earnings. And I just lose my advantage as a retail investor when it takes me that long to go through earnings. So at this point, Well Health Technologies, I love the company. We still chat about it every once in a while on the Discord, but it's off my channel because it's absolutely too complicated. I have not listened or watched ICE yet. Keep in mind, I have so many stocks I'm researching. I have a list in my Discord. I have a research list, and I have a requested research list. There's about 30 stocks on there right now. I get through about 2 to 3 a week, like fully researched. So I have not looked at it yet, and I've never heard of Pudo Inc. Oh, isn't this? Yeah, Pudo. They got a CEO interview coming out soon, right? So we'll learn a little bit more. Hydrograph clean power doesn't sound like anything I'd be interested in. Clean power especially has just gone out of such favor. There's poor margins. I can go take a look, but just from the name, that's sad that, you could be that biased just from a name, but I think I've looked at it before. Would love your take on the latest Well Health press release reaffirming double-digit increase in EBITDA and revenue. I mean, the nice thing about Well Health Technologies reaffirming double-digit revenue and EBITDA is that they've put out 100 of these press releases. The market, the analysts, and the institutions struggle believing it, I guess, because the price target for Well Health Technologies has been $9, $8 to $9, and it's been $8 to $9 for the past as long as I can remember, like 2 years. And they keep putting out decent earnings with some problems, and share price goes up to $6 to $7, and then it falls back down to $3 to $4. So I don't watch this one anymore. So I don't really have a take on it. I think it's almost more of a trade, because it seems like every time Well Health Technologies goes down to $3 or $4, it goes back up to $6, $7, goes back down to $3 or $4. It's quite interesting. Cam, if you think Gatekeeper has gotten expensive, check out Recor Systems. It's been losing money for a long time, and traders at higher multiple than Gatekeeper. Absolutely. Look, there's some shit. We're in a bull market. It's getting like COVID out there for some people. I've seen a couple people already go on large rants on Twitter, X, right? Talking about this, like, all you investors are investing on hopium. This is absolutely insane. Rocket Lab is one of them. I'm not a huge follower of Rocket Lab, but I know there's people right now calling out Rocket Lab that it's 100 times revenue or something like that. It's like 1,000 times earnings. It's not even profitable, but share price just keeps going up and up and up and up and up. That's what happens sometimes. I look at individual companies, I look at my own research, and I determine whether something is, expensive or cheap or fairly valued just based on my own kind of work. So that's what I'm looking at. And yeah, that's where I'm at. I'm not saying that Gatekeeper is expensive. I'm saying that there is some larger contracts priced into the share price, right? What are they? $133 million market cap right now, 33 million trailing 12-month revenue. So people are waiting for that $23 million contract to come in. That's a pretty large contract, but that's $23 million over what, 3 years? So that'll get spread out pretty thin. They need some more large contracts. And people are thinking that this latest contract that still isn't announced, right, even though everything's signed, that this latest contract is kind of a catalyst into more large contracts. And I think that's fair. I think too many investors are looking at, what a company has done today and previously, like their history, when really we need to try to look at their future. That's the whole point of investing. So what is a company going to be 12 months from now, 48 months from now? We try to look into the future a little bit. And, people are predicting some large contracts for Gatekeeper, and I think that's wonderful. Thanks for your reply. Well is also planning a spinoff known as Wellstar, part of their EMR business. Would the spinoff make the company less complicated once part of their business is separated? Yes. Yes. If Well Health, I know they're talking about Circle Medical selling that, taking the cash from that sale, paying off some debt, spinning off Wellstar. If they did some things like that, then all of a sudden Well Health Technologies comes back into the little bit easier kind of category. But right now, man, they just make that company as difficult as possible. Sorry, don't know HMEV off the top of my head. There's a trend of people going to northern countries that are colder due to climate change. Which small caps do you think might be winners? No idea. No idea. If you look at cold, winning companies in cold, in theory, that should be data centers and artificial intelligence, right? Because you can operate a data center in Canada for a lot cheaper because of the colder weather, cooling down all the servers and everything else, as well as we have energy here, like we have natural gas and stuff like that. So if you're looking at cold or climate change or anything like that, maybe look at some data centers. But as far as emigration or population movement due to climate change, I don't think I'm going to see any effect in the stock market in my lifetime based on that. I don't know namesysctz.v valuation here. It's on my research list. I have not looked at that one yet. My apologies. So, yeah. I think I'm done, though. I'm an hour and 6 minutes into this. Promised the wife I would keep this to an hour, so I'm 6 minutes over. I really appreciate it. 67 people here talking about microcap stocks. Some good questions. I went through every question. My apologies. I was only able to answer about maybe 2/3 of the questions. It is hard, though. I always joke about this as it's like going to a small town. Microcap stocks, when you're from a small town and everybody's like, oh, do you know Jim Bob? Right? And it's like, yeah, it's a small town, but there's still 8,000 people in the small town. So I don't know Jim Bob. That's kind of what I feel like sometimes with microcap stocks. I know a lot of microcap stocks, but, there's only, maybe 1,000 or 2,000 that I can keep in my head at any one time. So, a few of these on the list, I'll write them down. I'll do some research, bring them up on the next live stream, and we can talk about them again next week. So I appreciate your time. Thanks for joining me here on Common Sense Investing, and I will see you in a week.